One final international player before we go to break, and that's Diageo, UK-based company, owns brands like Johnnie Walker. Where's my Johnnie Walker? Damn, I forgot to get one of those as well. Or Captain Morgan or Tanqueray, all of those gin brands. Guinness, an enormous seller globally. J&B, Bells, those are whiskies as well, of course. Market cap $67.35 billion. That's, I think, if you look at the ADR in New York, but of course it is principally London listed under the code DGE. Price to earnings ratio 20.37, dividend yield 3.5%. Let's go straight to the share price. So we are looking at the US ADR, which is priced in dollars, but the share chart looks roughly the same in London. In other words, it hits an all-time high back in 2013 and sort of drifted sideways and to the right since then. Chris?
Paul, you make the important point here that this is a London-listed stock, and because of the problems that London-listed stocks are currently having with the likely fallout from the continuing fallout from Brexit, we've got Theresa May, for example, talking today at Lancaster House about Britain's hard Brexit.
Yep.
Now, if that eventuates, you're going to see continued pressure on the pound, and that being the case, companies like Diageo, BAT, and others are going to suffer.
Oddly enough,
translate them
interesting you say that, because I've been hearing or seeing stories about people from Europe going to the UK to buy luxury goods because you can get them for less until they run out of stock.
Yes. Yeah, no, absolutely. I'm just thinking purely of the currency translation.
Yeah, and in time that's not a net benefit, because the uncertainty and concerns around the economic outlook will have an impact on sales.
Absolutely.
What I mentioned earlier was this relationship with Moët Hennessy. So apparently Diageo owns 34% of the Moët Hennessy business, which LVMH owns the rest of, and it relates to some historic arrangements where they have joint distribution in many countries around the world. That's an interesting one.
Yeah.
I suppose it doesn't really matter. But these are powerful brands. There's nothing to be said. I mean, they are number one or number two across the board. Like in vodka, for example, Smirnoff is either the number one or number two in the world.
And as you said with reference to LVMH, I mean, it's beautifully diversified. Look, some of the brands taking a little bit of strain. Captain Morgan not doing so well in the US at this point in time.
Why?
But, well, I don't know. It's just, I think really it's just a bit of fashion.
Pirates of the Caribbean need to really do a launch. Maybe Johnny Depp could find his way too.
But I think given the degree of diversification to which we've alluded, that's going to be a temporary phenomenon.
Yeah, because millennials, they don't have cars, they're not interested in buying homes, they want to live in the parents' basement and play video games, but when they go out, then they want to drink Jaeger bombs and Bundaberg shots in the house. So, it's just a question of spending priorities.
Yeah, and as you say, these brands are incredibly powerful.
Yeah. Okay, so the question is, let's look at that share chart again. If it is going to be hot, Chris, we're going to have to be hot on it after a period of some years of not very exciting performance. So how are you going to call it? Are you going to say, look, it's in London and therefore we're going to give it a wait and see? Or
yeah, I'm a wait and see on this one, unfortunately, so I'm not hot on Diageo.
Yeah, I think that's the right call. I mean, we may be wrong, and we've been wrong before, because sometimes things shift and change, but for the moment it doesn't seem all that compelling at that valuation level, strong as the brands are.